Hey everyone, welcome back to the channel. So I've gotten a few requests to do a Webull technical indicator video that goes over all of the technical indicators that I use to do my day trading, to choose my entry points, exit points, and also to determine stocks that are currently on the move. So hopefully this video really helps you guys out a lot for your if you're new to day trading, or if you're new to swing trading, or if just overall you're trying to get a clear understanding when it's a good entry point or exit point, when to buy a stock, even if it's from an investment aspect. So let's just kind of hop into this. So in terms of indicators, what I like to use is the exponential exponential moving average. I like to use the RSI, and I like to use volume. Those are pretty much the main things that I will use. I also will use trend lines to show major support and resistance levels on the daily and also on the intraday. And so let's just kind of go over and see exactly what a chart will exactly look like when I have all my indicators set up, and exactly what I'm looking for when I set these indicators up. So from an indicator standpoint, I will go over, obviously you guys know I'm on my Webull platform, and let's just choose Apple because right now I'm a fanboy of Apple at the moment. So okay, so we have Apple here. Let's go over to the indicators, RSI, EMA. So we have those. Let's go over to the edit indicators, and we are going to go over to the EMA side, and we're going to select the periods. Now the periods that I like to use are the 9-day, the 20-day period, the 50, the 100, and the 200. These are the main indicators that stocks like to bounce off of when it comes to testing support levels, and so I just find that they work significantly well. One of the things you want to do is you want to make sure that you have them highlighted over here, but you also want to make sure that you have them color coded. You want to make sure that you can pick a color code that kind of correlates to how you see the indicators. So for me, I just like to choose green, just some color green. It doesn't really matter. They just kind of indicate, okay, green, initial, bounce. And then from a 20, I might use, say, like a, I don't know, let's just do more like a, let's do a, I don't know, peach. And then a 50, let's do a little bit of blue. I don't know. Again, I'm just kind of giving you guys some colors here. And then the 100 will be a little darker blue. And then the, let's do a little darker here. There we go. And then the EMA, I would choose red. Normally red is bad, but when it comes to stock trading, dealing with EMAs, red is actually good, because that gives an indication that it's really oversold and it may be a good time to enter in. Alright, so I have the period set up. Alright, I don't really have this selected here, so it's an added period, but I don't have anything added in there. So I have that set up, I hit done, and then that's what this looks like. So this shows you that basically Apple, again I'm just using this as an example, has been just slowly trending along its 9-day moving average, exponential moving average. It hasn't really broken it, it's just following along that line. Alright, and what I also like here is that it actually gives you, and this is a new feature, I don't recall Webull doing this in the previous feature, even actually breaks down and highlights the price targets for the moving averages, which I think is a super cool feature. So I also use another platform. I won't say the name at the moment, but they don't highlight the moving average price points like this. So this is really cool. So I use that. Another indicator that I use that I already have selected, but I'll just show you how to highlight it if you don't have it already. Indicators. So go over here and do the RSI. And the RSI is basically the relative strength indicator. This basically tells you if a stock is significantly overbought or oversold, and based on the speed in which it's overbought or oversold. So if there's a ton of buying, it's just an upshift in movement of the stock price, or if there's a ton of selling and there's a significant downshift, then it's basically designed to just give an indication of extreme volatility of a stock, so extremely overbought or extreme oversold, and that gives you a good indication as to when there's a good time to short or buy a stock based on the high likelihood of it's going to bounce or fall off of a resistance level. So if you take a look here, I'll give you guys an examples of how to track this. So take a look at Apple. You see that it was, significantly oversold. If you guys are new to this, anything over 70 which is the line that's already pre-highlighted, is considered technically oversold. Now, excuse me, overbought. Now, it being overbought is not a guarantee that the stock is going to pull back, but what it does do is that it shows you that there's a likelihood that it's going to at least pull back just slightly in the interim. But if there's a significant enough move, it may potentially be an option to pull back significantly. All right, so if you take a look here, Apple's just kind of been trading along, not quite overbought yet. It's kind of getting up there. Boom, it's overbought at this point, but it didn't really care. It's still overbought. Over here, it's really overbought. So the more it gets overbought, the more likelihood it is for something to go ahead and reverse. And we see that the RSI is starting to drop down here. If I were looking to short this stock, seeing how it went up, significantly overbought, people are still looking at this, waiting on it, seeing the RSI drop like this normally tells me that a drop is imminent. So I would have probably shorted at this level, 249.75. Boom, red day the next day. Isn't that magic, right? Took me a while to learn that. I just gave it to you guys for free, right? This is the stuff that they charge thousands of dollars for. I'm making a YouTube video on because I want to make sure you guys know what you're doing and you're not blowing up your account. And this now, at this point here, when this stock here significantly dropped down on this red day, right? If you're day trading, this is probably a good time to take profits. And the reason being is that it hits a moving average off of the 9-day, and so stocks like to bounce off of moving averages, right? Even if it continues down, unless there's some significant bad news, it's more than likely going to bounce up the next day. And it actually bounced a little bit in the morning, and then it sold off. So you still would be good, but you would have given some back in the morning. You wouldn't have known that unless you held all day. Take a look. It's still a little bit on the overbought level, and then boom, goes to the races, right? So that's why when you're dealing with indicators, you got to take the money when it comes, right? You figure out the first move, and boom, it goes in your favor, take some money off the table, and then it's just basically just been following. All right, then we have the dump. So another indicator that I want to make sure that I highlight to you guys is volume. So volume is a great way of determining, it's basically a visual representation similar to the RSI, but it's not an indication of a particular trend reversal. It's more of an indication of how badly someone wants to get in or out of the stock. And so when you see a stock that's trading at significant volume like this, particularly when you have high selling or high buying, it can be an indication that the stock may be exhausted and they may be on the process of doing a reversal. But this really only applies for people who are looking to do a long-term investment, or who are looking to maybe catch an opposing move off of the support level, off of the resistance level. All right, so that's that. Now, from a buying perspective, you want to also make sure that you're always buying off of support levels. Even if you have to wait, say, days or even weeks, you want to make sure that in order to get an ideal entry point, that you're purchasing off of support levels. Now, when I say this, I'm referring to the daily, not intraday. That's a different aspect. But the same philosophy applies. You want to make sure that you're buying off of support, right? So if you wanted to go long, you see this here, you want to go ahead and buy that, right? Or let's say you want to go ahead long here again. This may be a good opportunity to buy here off of the 20. Right, you would have got some money in there. So just making sure that you buy off support is very, very important. One of the other reasons it's very important to buy off support is because you don't want to get caught in something like this. Out of the clear blue, stock just flat out drops, and then you're really upside down a lot. Also, take another look at this. When this stock started to fall as a result of the COVID-19 information, it bounced right off of its 200 MA. So the 200 MA is a very, very significant support level. It is probably one of the higher probability support levels that you're going to get when it comes to a trend reversal. So what I mean by that is that it's almost always a significant support level. That means that a stock is really, really oversold. And when it's combined with the RSI that's below 30, you can almost guarantee that there's going to be some type of trend reversal, even if it's just for a day or two, and that's all you really care about. And so if you're like, let's say if you're looking to buy Apple, right, and you see the stock falling, like, okay, wow, okay, great, I want to really increase my odds of buying this, Maybe you try to get it here, but it overshot it. Okay, great. Then you go, okay, great. Maybe I want to try to buy it off this level. Okay, you would have gotten in here. It would have shot up. You would have got a little bit of profit if you got out that day. But if not, you would have been down. But even if you had held, you would have gotten out in the next couple of days. But if you take a look, if you wait and you try to get it near that 200, I mean, look at the profit potential there, right? This works really well, particularly with the really high tech stocks and the really grade A blue chip stocks. The big market makers and the big institutions and algos, they just all jump in on top of each other when it comes to the 200 MA. So excellent, excellent, excellent entry point from an investment standpoint, day trading, buying, swing trading, the whole nine. So that's that. All right, and so that's pretty much it from the daily. One of the other things that I also do, and I'd be remiss if I didn't tell you guys this, is I highlight very significant support levels, right? So it's very important that when you guys are trading, that you're using support levels, and the reason being is that these are general areas, general levels to where people meaning the algorithms, actually are looking to buy and sell, right? So you'll see sometimes, I mean, these are general ranges, so you'll see sometimes that it may not necessarily hit exactly. It may go a little bit before it, you may miss it, right? Or it may go a little bit past it. You may think, oh no, it's going to go down, I'm going to lose a bunch of money. And they go psych and reverses, like, oh, okay, great, I did buy at a good level. But these are general areas where this is a good buy. Particularly if you see that a stock had a hard time hitting a certain level and it's very clear they just got stuck and sold off, and then go over here again. If you see it hit that level a little bit, and then it kind of curled up and hit off. So a clear indication of a resistance level, but this also then turns into support. So when Apple, whenever, sometime this year or in this decade, decides to pull back just 10%, this is going to be a very key indicator. A very key level. This what is this? 330, 346 level. Yeah, somewhere around there. Where are we at? 328.59. I'm sorry. That's going to be a very key indicator. But before it even touches that, it's going to come back here and it's going to retest 343, and it may bounce off, and then it may come down and it may test. Well, where are we at here? That's where it's at now, 351. Yeah. So it's going to test 343, then it may come down and test 333, and then so forth, so forth. And then when it comes to buying, you just buy off the indicators, or you can buy off these major support levels if you're not quite comfortable doing that. Or if you're ultra conservative, you can just wait. And now again, you may be waiting months upon months or even 6 months. If you take a look here, Apple doesn't hit its 200 very often. It hit it back here when this was the whole tariff issues with China. It hit it here when this is still kind of a tariff uncertainty. It started to hit it here, but then the algorithms jumped ahead and jumped ahead of each other and stopped it from touching. It hit it here during the COVID deal, and then it's going to probably hit it here too. Maybe another 3-6 months, a year, who knows? But it will hit it. And if you're looking for an excellent entry point, that'd be a good time to do it. So those are the indicators that I use. These are indicators that anyone worth their salt from a day trading or investing or entry point standpoint are going to be using. Now let me show you guys how to do this on the intraday, which is what a lot of you guys are probably also curious to use. Alright, so I am going to use a stock that I lost a few dollars on because it trades like a freaking penny stock right now. It is Boeing. Okay, so if you take a look at Boeing, these are the moving averages for it. It's just, that goes back to this here. Way oversold, right? Like 30's oversold, and this thing was down to the 13. You see it starting to perk a little bit. It's probably a good time to enter in, a few dollars, and you would have made 50% profit. Even if you were late here, you would have still made 40% profit. Even here, you would have made profit. So that's a good time to buy. Alright, so we get here. That's how you do it. One of the things that you can't see now, before I change my chart here, is I like to draw chart patterns based on the support and resistance that I see that a stock is doing on the daily to also help me trade on the intraday. So right now, all of the airline stocks, and Boeing trades like an airline stock, is starting to form a sort of a flag pattern. A pennant pattern is what we actually call this in technical analysis, a pennant. And a pennant is where a stock is shooting up and it starts to triangulate in kind of this invisible wall here. If you notice, it shot up here, shot down, shot up, shot down. And so this is showing a pent up desire for the stock to choose direction, right? It's kind of like I'm trying to think how to describe it, but it's just pent up pressure in the stock. And so this is not an indication that it's going to go up or down, but it is an indication that it's about to move, and when it moves, it's going to be very forceful. So looking at this is a 50-50 move, but if you wanted to trade this on the intraday, right, which is on the inside of the day, what you could basically do is you would just take a couple of indicators, you would highlight the support levels that you would have here, and you could literally just trade based on those levels. Alright, that's how you would do it. So we could take some levels here, break those down. We can also take another one here and break those down. And if you notice, you'll see that the stock is actually trading in the triangular form in this intraday as well. So literally, as you see the stock start to hit this bottom, I actually traded this stock today. I made a few dollars because I noticed the triangulating format, and so when I saw it coming down here, starting to touch this again, I went ahead and bought it, and I made a few dollars coming up off this way. It's moving up after hours. That's a tongue twister, but that's how you do it, right? So it's just basically drawing trend lines. And you want to always make sure that you are buying stocks off of support. Professional traders and people who are really smart about this, they don't really chase stocks. When you start chasing stocks, you really get into trouble because your emotions take hold. You start forgetting exactly why you bought the stock in the first place. You got up a few dollars because you chased one stock, so you kind of get this false theory that, oh, chasing actually does work. I can just bull the market. And then you get caught, right? So they'll give you a few $100s or $1,000, whatever, chasing, and then you'll decide, oh, I'm going to chase bigger and bigger and bigger, and then you'll chase bigger and bigger and bigger, and then you get caught in something like this, right? Chasing. If you take a look here at this stock, as I already told you guys in the video, what does RSI 70 more mean? It means it's overbought. Bad time to buy. 68, okay, it's starting to get up there. Pop, okay, even here from the RSI, it is overbought. Boom. Alright, so it hasn't reversed yet, but when it reverses, it's going to be hard. Alright, not a good entry point, but maybe you're chasing. You got lucky. Look at that. They gave you some money. Now look at this. Now it's at 82 RSI from an overbought standpoint. This thing has to pull back. There's so much reverse pressure pent up. Wow. Still overbought. Oh, I'm just going to keep chasing. No, you're not. You're upside down. Stock pulled back like 30%. Right? So this is what happens a lot of times when you will chase. You always want to make sure that you're buying here, right? When no one's really catching it, instead of buying here. Or if you are going to buy here, buy smaller amounts. But pretty much, guys, that's what I do to do the day trading and the swing trading. It's not overly complicated, but it is something that is very difficult to do because of the emotional aspect. When you guys see stocks that are starting to run up like Boeing that did last week, or when you see, let's say, another airline company, you have AAL, American Airlines, it's very hard a lot of the times to control the emotions, and so a lot of times people tend to go in very large amounts or use huge position sizes, and then they get caught and then they're wiped out. And so I've made that mistake in the past. That's a very big mistake that a lot of new traders make, and then it just basically wipes you out the game. Professional day traders or people who actually are doing this, even like on a part-time basis, they understand that when you're buying stocks, even if you just know or you believe that a stock is going to pop, you never want to go in a huge position size. You want to maybe go in 10% of your position, 10% of your portfolio. So let's say you have a couple of $1,000, about $500 worth, right? Because then that way, if you see it moving up, you can continue to add, and then you're not sitting up there if you get lost. So you know the name of the game in day trading and swing trading and really anything is actually, it's not sexy, but this is the name of the game, and it all comes down to protecting your capital. So if you can protect your capital, you can always stay in the game, because the moment you start losing it, then you know you have problems. So that's pretty much it. And a little bonus, if you guys have gotten this far, I really do appreciate it. I hope that you have already subscribed to the channel and you've hit that like button, because that means you really enjoy the content. And if you have enjoyed the content, please let me know in the comments below, because that makes me feel good when I see good comments, because that means you guys are watching and that means I'm putting out good stuff. So yeah, so with that, if you guys have gotten to the end of the video, I'm going to give you a little bonus. Do you see anything special in this chart? How about this chart? See anything special? How about this chart? Based on what I've showed you guys already, you see anything special? Yep, you know what you're seeing? They're all forming that pendant, right? So that means I'm expecting Delta and also American Airlines and Boeing to have a significant breakout here in the next few days. So as of right now, this is June 18th, 2020. So the information obviously is still valid for years to come. So whenever you guys watching this video, it's going to be super valid. But in terms of the outcome of this, this actually will even further prove my point as to whether or not my technical analysis is accurate, as to whether or not this stock has popped up or popped down. To give you a heads up, I am actually long biased this stock, meaning I think that this stock is going to break out, and I think it's going to break out to the upside. So if you guys are watching this video in the next day or a few days or weeks or so, and you see that that's breaking to the upside, then definitely smash that like button and subscribe, because then that means you know I'm giving you good technical analysis. So thanks so much for tuning in, guys. Hopefully you found this content very valuable. Again, this is information that took me years upon years upon years to learn. I've studied lots of technical books and technical analysis. I've lost thousands of dollars before I finally started to make money in the markets, and it just really just comes from a lot of trial and error. A lot of people don't actually like to give people the game when it comes to stock trading, because you know a lot of people, they've spent their own years and time and even like 4 or 5, 6 years learning this by themselves, and no one really teaches them. So you know they have that mentality of then, well, I'm not going to teach anyone, and I just don't have that mentality. You know, I think there's plenty of money to get in the markets for everyone, and you know everyone should be able to live a plentiful and healthy life. And because of that, I think that you know if you can take this information and get in the markets and make some money, then absolutely, let's do it. So hopefully you guys found this content very valuable. Thanks so much for the view, and yeah, so I'll talk to you again. Take care.